Welcome, everyone. It's the cryptolark. Super excited to have back on the show Alex from Nuggets News. Alex, how's it going?
Very good. Thanks, Lark. Everyone at home, thanks for having me on.
Absolutely. I'm always super excited to chat to you. And today we're going to be talking all about global markets. So it's going to be a great chat. Make sure you stick around for it. We're going to be talking about what's happening with the Federal Reserve. We're going to be talking about what's happening with COVID. We're going to be talking about what happened at the stock markets today, oil and gold and silver. And of course, yes, Bitcoin and cryptocurrencies. So make sure to stick around. It's going to be a great, great chat. Now, I think the logical place to start off our little discussion is going to be what happened with the stock markets today. I was blown away. It hit the circuit breakers within 3 minutes of opening. So that's wild.
I know. I mean, this has been something that's been so fascinating to me for 10 years now, Lark. And it all started off after the last financial crisis when I lost a heap of money and went down that rabbit hole. And to see it playing out so aggressively, I think in a lot of ways it's already worse than the last financial crisis in terms of the velocity that's started. So last week we were joking about when to do this interview and sort of saying it's probably going to get worse on Monday at that open. And sure enough, we hit those circuit breakers and the Dow's down 13% or 3,000 points. So I think why it's been so nasty is because markets aren't healthcare professionals, and they didn't price this in correctly. So
Mm.
as you know, I'm a pharmacist, and I was doing that video a month or two ago about how the virus is quite contagious and it's likely to spread, and the only way to stop it will be lockdowns, this, that, and the other. So you sort of forecast that in your mind and say, well, that's going to be pretty bad if they have to shut down the economy. But even like I couldn't have predicted it was going to be this bad. And we're at this point now where it's still not reality for a lot of people in Australia and particularly America. They've got that sense of entitlement, and I've seen a few of these tweets about, this is America, we'll do what we want, and young people won't be affected, so I'm not scared, I'm going to do what I want. But I mean, in the scheme of things, the only way to stop it from spreading and from killing your grandparents, the elderly, and the immunocompromised, we all have to take this seriously, and that's not happening. And stock markets are now trying to price that in.
The problem with those kind of attitudes too is that it prolongs the pain, because if you have people continuing the infection process, then lockdowns last longer, people stay out of work for longer, right? The very people who might be quite arrogantly, well, I'm going to do whatever I want, right? Those are the guys, well, you're in a couple weeks, you're going to be out of a job, right? And then you can do whatever you want, right? Great. Now you've got no job either, so you have no money to do the things that you want, and this process will continue for longer. And it's just this cyclical process of more and more pain unless people take things seriously.
Yeah, I should probably add it's not just elderly people. We're now getting a lot of reports that there's been healthy people and even athletes. There was a basketball player in America the other day who wasn't taking it seriously, and I think he kissed all the microphones or touched all the microphones at the conference, and then he came down with coronavirus a couple of days later. Um, Reports that it is also attacking other organs. So we've seen some people go into heart failure that are healthy individuals. So we have to take this seriously uh, until you eradicate it from everyone, as you say. If only 90% of people quarantine and 10% keep spreading it around, it has this sort of boomerang effect where it could bounce back. So we've got to stamp it out altogether.
That's right. And obviously the markets have just been getting wrecked by this overall. And I look at COVID as the match that lit the house of cards on fire, right? Yes, it is a major catalyst for the current economic event that we're seeing, but part of the reason why the economic event side of it is so bad is because the financial situation, really, we've just plastered over the cracks in the wall from 2008. We never really fixed anything.
100%. And I know everyone's got their theory. And don't forget, 3 weeks ago, central banks were saving the world from climate change. That was the headlines all over, all these websites. So whether you want to call that the excuse or the cover up or the conspiracy theory, it doesn't really matter to me. What's happening is that they're kind of deflecting that and using that for the blame. But we all know that we're at record amounts of debt, zombie companies, low interest rates, everything was just so fake, and it had to come back down to reality. And this is why it's hurting so much, because reality was so far from where we got to.
That's a really good point, that we really overdid things quite a bit with all this. Just, yeah, the rate cuts, the free money, all this stuff that just kept going and going and going and going and going for such a long time. And actually, we take it back to last year. I remember when they announced the extra money for the repo markets, and that's really when I thought like, oh man, it's something bad's going on, and it's going to happen probably in the next few months. And it took about 6 months from that point, but that really started to show that we had this massive liquidity crisis happening in the markets. And at the time, I were, oh, the markets are great, everything's great. The markets were not great, obviously.
No, JP Morgan in particular, they've just become such a behemoth. They were so important to the markets because they would lend out their excess dollars into the market for those people that needed it to shore up their books and their liquidity and whatnot. And they stopped doing that. A lot of other banks thought that a better use of their money is to speculate or particularly go into bonds. And we saw how bonds really took off and everyone wanted to get into the safety of bonds. But now the Fed have got this headache where they're printing all this money, but a lot of the new rules require you to have bonds and other sort of collateral to shore up your books. And no matter how much money they're printing, it's not going to where it's actually needed. So it's sort of stuck in this system where banks still aren't lending to each other because I think they're fearful, and there's a real chance now that there's some hedge funds or banks that are insolvent. And if you lend to someone else and then they crash, you don't get that position back, obviously. That's why there's so much fear in the markets and they're freezing up. And the Fed are basically powerless. They've said, oh, we're going to do – it started off at 500, then it was $1 trillion, then it was unlimited, but – it's not enough because that's not really the problem.
Yeah, it's we are going to see insolvencies. I am a big believer in that, and that's in and out of the traditional markets. By the way, I'd like for everyone to understand that. Yeah, we're going to see banks go under. We're going to see capital controls put into banks because the banks don't have enough money. They're not able to get their hands on enough money, right? All the money is going to the wrong places. They're putting up unlimited money for, the guys on Wall Street, right? So all these giant banks and stuff, yeah, they're getting money, but then they're just putting it, they're keeping it. They're not putting it out there. It's not having the impact that they want it to have. So we could see smaller banks go under. We could even see some big banks go under. Lots of companies are at massive risk. I mean, Air New Zealand, for example, they cut 85% of their long-haul flights. No one's going anywhere. Airlines are going to get hit hard. I don't know how Air New Zealand will do, but I mean, just that as an example, like airlines are going to get hit hard. Train companies will get hit hard. Restaurants, cafes, all this stuff. So, I mean, from small businesses right up to the big guys, we're going to see a lot of that happen. And I think also in the crypto industry, I think this is something people aren't taking enough notice of either, is that we probably will see some insolvencies in the crypto industry as well.
Yeah, crypto is an interesting one because it's almost like it's worked in our favor that some of these products don't have any real world customers yet. So there's no demand that can drop off. In a lot of ways, we're in this building stage. And a lot of that happens from home on computers. So I think that's something that can actually really favor the crypto industry compared to a lot of others. But I think in the US, the foot traffic's already dropped off significantly in restaurants, but that's in a place where they haven't really had any lockdowns yet. So I think we're going to see 90% plus drop-offs in foot traffic for retail, restaurants. That just puts small businesses in such a hard position. The Australian government and some of the local governments have announced some handouts to support small business in terms of payroll tax and stimulus. But at the end of the day, these are all just Band-Aids. You can't – these are trillion dollar problems. You're talking about the GDP of countries dropping – 20, 30, 50% if everyone goes into lockdown for months and months. There's no way you can pay every business's expenses for that. That is just multi-trillion dollar stuff we're talking about. So that's why all these little bonuses and packages that the Prime Minister in Australia is probably going to roll up again today and, talk about how he's going to do $20 billion of stimulus, but it's nothing in the scheme of things.
This is exactly right. The problem is so big. Right, all the money they're throwing at it's not really having much of an effect because it's nowhere near the sum of money that the actual problem is. Right, so we've seen, the Federal Reserve say, well, they're going to put up $1.5 trillion and $700 billion in quantitative easing, and they've cut the interest rates and all this stuff, and none of it's working. A lot of that was announced over the weekend, and then on Monday, the stock markets were going to hit super hard. All the money in the world didn't stop the stock markets from crashing again.
Yeah, I think in the US they're not even targeting. Like in Australia, we saw a little bit of sort of business targeting and support, fiscal sort of spending. In America, I don't think there's been that much talk of that yet. It's still all about saving Wall Street, stopping the credit markets freezing. How do we stop the banks from going under? Let's rescue the bond market. There's no talk of everyday Americans getting support.
I think we're going to see a situation here in the coming months where we are likely to start seeing potentially quite tough negative rates in a lot more places where people never thought they would happen. I mean, we've seen this emergency rate cut by the Fed down to 0%, seeing negative rates if as things continue to get worse, right? We might be looking at a situation where the majority of the U.S. gets locked down. I mean, negative bank rates is a very real possibility. Well, what are your thoughts? You think we're going to see negative rates coming all over the world?
Yeah, I think it was literally a month or so ago in Australia when they're talking about, interest rates won't go too low. I think a year ago they were talking about how they were going to start raising rates, and it was the same in the US. We're going to raise rates. Everything's going to be great. We're projecting all this growth. And they were all denying the fact that QE was going to be a reality in Australia. And then a couple of weeks ago, New Zealand sort of floated the idea that this might be coming, and Australia and that are saying, it's still really unlikely in this country. And then last week, New Zealand came out and said that, yeah, we're probably going to be looking at things like low or negative rates. And if that happens, we're going to have to change the laws around cash because people would try and hoard cash out of the banks. So we'd have to change the laws. So that basically proved all the conspiracy theorists right about negative interest rates. And that's still something in Australia that they're trying to pass through. And calling it a conspiracy theory. So yes, America, emergency cuts down to zero. I think every country goes to zero, and then you either go negative or they keep printing money. That's the only thing they really know how to do. At that point, if you've been a prepper with your gold and silver, or you've got your cash, or you've spent it and you've got some stable coins, Bitcoin, whatever, you're pretty happy if you're outside the system once all these draconian laws come in where they're not going to let you take out money. We're already hearing that literally this week in Australia, people telling us that they've been to the banks and then allowed to withdraw cash, and the individual branches make these excuses and whatnot.
There you go. It's happening already, guys. That's the thing to keep in mind, is that it's such a vicious cycle when you actually put it all together. So if we have negative rates, you're going to be punished for keeping money in the bank, right? At the same time, you're going to have massive inflation happening. So your actual, not only are you going to lose 2 or 3% of your deposit thanks to the negative rates, and those are being passed on to customers. Europe's already proved that they're very willing to pass these negative rates on to customers, and it might get to the point where they hit all accounts, not just big account holders. So you're going to be losing money thanks to the negative rates. You're going to be losing purchasing power via massive inflation as they keep printing money like crazy to try to stop this problem. And you have to keep your money in the criminal banks. If you take your money out of the bank, you're going to get flagged. You're going to get put on a list. They're not even going to let you take the money out of the bank. The fact that you came in and asked for cash is going to make you a suspect. And if you actually have cash, that's going to make you a criminal. We've seen this criminalization of cash, which is, Bitcoin, man. Bitcoin, holy cow.
Yeah, and that's why it's been, I guess, a bit frustrating watching Bitcoin sort of fail in the short term, I guess you'd say, where if it was ever going to have some sort of safe haven status or even just an uncorrelated status, I would have said that's a huge win when markets are crashing. But it's basically been highly correlated to stock markets and sold off. Now, there's been glimpses. Last week we had a bit of a rally when stocks went down. Today, stocks have had a really bad day, and Bitcoin's sort of holding up okay if we're looking at the charts. So hopefully if Bitcoin can detach from that, make itself known as this separate system, and in this world where we're now going to be printing trillions of dollars in every currency and negative rates, that is just that environment where Bitcoin is going to, I just can't see how you can't be bullish medium to longer term, but short term, hey, it looks like it's going to be a rocky ride.
Yeah, absolutely. I absolutely agree. Now, one thing that I've been talking a bit about, and I've seen a couple, big VC guys comment on Twitter, as well as a lot of the sell-off that we've seen is really people de-risking from their assets, and not just people, really. I mean, we're talking about like hedge funds, Fidelity customers, people like this, the real sort of like traditional investor types who did go and get, 1, 2, 3% of their portfolio into Bitcoin. And as soon as, the crap started hitting the fan, these guys were I'm going to cash. I mean, everything get cash and bonds, and they just dumped Bitcoin, basically. Bitcoin made it. We got all the big investors on board, and then they were the first ones to rush for the exits when things started getting tough. What do you think about this theory?
You're hearing mixed reports, aren't you? Like some of the Mike Novogratzes of the world are saying that institutional investors are scared, and it's set everything back 12 months, which, look, maybe a lot of that on-chain data still says that there hasn't really been that many selling from the old hands and that the top whale accounts and whatnot. So I think a lot of people that are getting margin calls, they have to sell everything. Gold and silver's gone down as well as Bitcoin. A lot of the crypto crowd hopefully isn't as exposed to stocks. They're kind of the cypherpunks that they haven't got all their money in stocks. They weren't big believers in that world. So hopefully there's less forced selling from the crypto community than, the forced selling of guys in the stock world that are having to sell their ETFs and whatnot. But the other thing is that if no matter how bad this gets, if Bitcoin can sort of prove that it's a liquid market, so they're having to intervene in the stock market, in bond markets, in interest rate markets. If Bitcoin can have no intervention and no one come and save it and sort of survive this biggest crash in modern times, then it gets a bit more of a reputation for itself that, if it's actually quite liquid if you do need to sell. And next time round, when Bitcoin's $100,000 a coin, it has this reputation where it's almost as liquid as the US dollar. When everyone wants to go into dollars or bonds, they know they can get in and out. So hopefully we get this reputation as, it's a global liquid market, no matter what currency you're in. And at the moment, it's kind of, I don't like the fact that we're getting price discovery from BitMEX, and we had that cascade of crash the other day. But all these signs are the honey badger, the anti-fragility that makes Bitcoin stronger.
Yeah, that BitMEX situation was absolutely crazy. It's a good thing that they went into emergency maintenance when the cascade really started coming down. But you make a great point about the liquidity of Bitcoin. And also there's this, I think really Bitcoin's one of the freest markets in the world. What do you think about it? Because there's not actually anyone who can step in and save the crypto markets, right? If it's going to go to zero, that's what the markets decide. Not that it's going to go to zero, but there's no Federal Reserve to step in and say, let's shore up the Bitcoin markets. It doesn't work like that, right? This is free markets deciding the value of these assets, and that's very exciting in a way.
Yeah, I'm sure some people say that Tether will print Tether out of thin air and come save the markets and whatnot, but no, I think Bitcoin certainly has its manipulators in terms of the whales that push it around and leverage trading. But in terms of who's going to save the market, it's the Federal Reserve aren't coming to save Bitcoin anytime soon.
Now we've seen gold and silver also getting hit pretty hard today. So it's interesting to think. I mean, there's not really any safe place to go at the moment. You can go into cash, but then you're looking at negative rates, potential capital controls, and obviously inflation on those dollars, which may be less painful than some of the drops we're seeing in different equities and in gold and silver and stuff like that. But what do you think's behind the big gold and silver drop that we've seen?
Yeah, it's quite funny when Peter Schiff's out there saying that Bitcoin's failed its test and it's not a safe haven, and then gold absolutely tanks. Silver's down 35, 40%. So Peter's got to eat his own words, and that's why I hate it when gold and silver crowds fight. As you know, I'm pretty bullish on both of them. So it's going through exactly what everything is going through at the moment in that sell-off. But what I think has really changed this week, we've heard lines out the door at bullion dealers all around Australia. So there is huge demand and stories of shortages across the US as well in the physical markets. So what's collapsing is the paper price, and it's not that different to the BitMEX situation where all these leveraged futures traders, a lot of them were long as well. So it was that cascade of liquidations, and the paper price is getting absolutely crushed. But man, oh man, you can imagine the lines out the door to buy $12 silver at bullion dealers today. They're going to be told there's 6 weeks wait, this, that, or the other. So I think it's just maybe the paper markets and the derivative markets breaking, which is what a lot of people have wanted to see for years.
Yeah, this is actually a really, really good point. The underlying assets themselves are very different from the paper markets, right? And if we think about all the margin calls that happened, I think a lot of people got margin calls over the last couple of days who never thought they were going to get margin called on their plays. If you take BitMEX as an example, if you went 2 or 3x long on Bitcoin from I don't know, let's say 7K or something like that, you're like, that's fine. I'm never going to get a margin call for $3,800. That's ridiculous. And then it happened, right? People got caught with their pants down basically by how much pain came into the market.
Yeah, and all exchanges froze as well. So I think that's another learning lesson for people, that it's so important to have the majority of your coins in your HODL stack long term. And trading's good fun, but you've just got to be prepared. There are going to be days where every exchange was down. The other day, Binance, BitMEX had a nightmare of a time. A lot of exchanges were affected. People were trying to get money into the system, but they're scrambling. Oh, how do I get this exchange and deposit? And by the time the money gets in, it's price is going back up, or they're trying to send Bitcoin to an exchange and the network gets clogged again, or Ethereum gas prices went up when Maker and all these dApps and DEXs were using up all the gas. So you've got to have a plan ahead of time. And I know the other day, for example, my plan was using Litecoin to go between exchanges when I was trading and whatnot. So guys, you got to think about all those things.
Yeah, that's clever. That's clever. Now, all of this crazy is happening, right, with global markets and interest rates and all this stuff. And at the exact time that really, we're hitting peak crazy, Saudi Arabia, Russia, and the United States decide to go into a massive price war over oil. This is craziness of all times. Of course they do it now, obviously. But how do you think the what we're seeing in the oil markets is going to really just affect everything? Because obviously, oil is the old oil, right? We always say data is the new oil, but no, oil's still oil for the global economy.
Yeah, so when you think about everything we've spoken today that's hit the stock markets in a perfect storm, when they were already overvalued, we had the sort of the climate change, we're going to save you from that argument put forward. And then we had this, we're going to invest in all the renewables, and that was sort of a new theme that was coming out of it all. Then we had, the bushfires in Australia that hit us, and now coronavirus. But now we've got the oil market, and the energy sector is one of the most important in the world. Russia have got to this position where they've got all this gold, $100 billion of reserves. They're selling down on their US treasuries. But what is going to happen if they can pump oil and Saudi Arabia can pump oil at these low prices, and they can survive at $10 a barrel if they have to for years? What it does is it puts out of business all these US shale, Canadian tar sands producers that have a $50 per barrel cost. And all those companies, they're not like Saudi Arabia where they've got a long history, they've got all these reserves and whatnot. They've got debts and they've borrowed a heap of money to do all this. They've issued all these junk bonds, or some of them at the level above junk. And again, this is what's going to cause the cascade house of cards collapse of the US bond markets, junk bond markets, and energy sector, which is part of the stock market. So that they probably don't have more than a few weeks, 3 months that they could survive before this starts to just break.
The political implications of what's going on in the oil markets are also really, really fascinating because in a lot of ways, I think Russia is pretty well positioned to be able to ride such a situation out. You mentioned they've been mad stockpiling gold for the last couple years, but really in 2019 they added a lot of gold to their treasury, which was very, very clever. And Russia also no debt, right? So where we see this big opposition to a country like America, which has like 23, probably coming on $24 trillion in debt, just unimaginable amounts of debt. And you have a country like Russia, which is, not in debt like that. It's a very stark difference. In fact, they have all this savings in terms of gold and foreign currency reserves, and they've got the ability to produce oil quite cheaply and to stay in the game when it comes to that. So, and also I think all the sanctions we've seen happening with Russia has also really seen a renaissance of domestic industries. I've seen, for example, a lot of new Russian food companies coming onto the market, which previously there was this, everything Russian's bad and you got to get all your food out of Europe and stuff like this. Is where they make all the good stuff. And now with all the sanctions, there's been this big renaissance of really self-dependence or, being independent from all these other sources. So it's pretty interesting to see how that's going to play out, I think, long-term as well.
That's very interesting. And again, with India banning medicines exports to other countries, when China went to complete lockdown for a month, people were like, whoa, we didn't realize we're so dependent on China for all our antibiotics or for all this manufacturing. So I think it's shaking up this globalization talk. But Saudi Arabia and Russia pumping that oil, you can say it's a political war. You can say they're just doing what's right for them. But the fact is, it is going to really hurt the US.
Yeah. Absolutely. It's going to probably kill the U.S. oil markets, at least, short term, potentially, terminally long term. So now let's talk a little bit more about Bitcoin here. Do you think that the pain is largely over for Bitcoin? Do you think that maybe 3,800 could have been almost a bottom for Bitcoin? Or you think you see people out there calling for $2,000 Bitcoin, they're calling for $1,000 Bitcoin, there are some very, very bearish people out there. And I think this happens every time we get, bearish sentiment in the market. People go super, super bearish. But what's your thought on it?
Yeah, I think we lost a lot of important levels. So there's been a little bit of like technical damage, you can say, on the charts. But again, a part of me says that BitMEX came out with that report that they were attacked the other day and the liquidation cascade. I just feel that price really got hammered lower than what it would have been if we didn't have these 100x derivative markets in terms of amount of people that would have sold. But then that changes people's sentiment. People say, well, geez, Bitcoin really isn't holding up well in these times. They see $4,000 instead of maybe it would have sold down to, say, six. And they say, oh, that's not too bad. So we need to take all that into account. I just think that you need to zoom out and look at that weekly chart, because day to day, I don't think that's going to spend very long down here. We could have a good weekly close again. Look, if we don't, and there's a lot of volume down here, then we've got to start looking at those lower levels. But for the time being, it's just a pretty big wick on the chart that was dragged down by BitMEX. So we're hearing stories that there's huge OTC demand in China. Again, whether or not you believe that. But anyone with free capital at the moment, I know personally I've been saying to put some of my super dollar cost averaging in at these prices. I just think people believe the Bitcoin narrative. It's got stronger with all the QE and everything. If you get to $2,000 Bitcoin, there's going to be a lot of people that want to put that in their super or their hardware wallet.
That's it. I think actually it's really opened the door for a lot of people who might have been on the sidelines and looking at Bitcoin at $10,000, thinking, I feel like I kind of missed the boat on that. Now it's back down to, 5,000 or 4,800, whatever it happens to be at the time of recording this. And they're thinking, that seems to have sold off a lot harder than a lot of other things. Maybe now's an interesting time to get back into this, especially considering all the stuff that's going on. If, of course, they understand the value propositions of Bitcoin.
Yeah, I just, you couldn't make up a more bullish narrative. Years ago when people got into Bitcoin because of, there's all this debt and there's inflation and whatnot, we didn't have negative interest rates, QE, repo markets, talks of cash bans. I mean, I tweeted that list the other day of more than a dozen things, and it is scary. Yesterday, there were like 12 announcements. Every hour, there was more coming out. So this is starting to snowball now. It's never been more clear that this system has failed, and there's just this perfect digital system sitting there that's just waiting for more people to utilize it.
Exactly. Well, maybe one bonus of all the self-isolations, people will have more time to, stay at home, watch YouTube videos, hit the like button for the YouTube algorithm, all that fun kind of stuff, and actually just learn about, Bitcoin and cryptocurrencies. Hopefully they don't just spend all their time watching cat videos.
No, and I mean, that's where it's important for people like ourselves to give people that education and information. And I completely agree. People are going to be at home and they're going to be asking questions. That video we did the other day with Raul that's really taken off. People want to know what is happening, and they turn on the news. Or in Australia, the Prime Minister's telling them that he's going to the footy this weekend and tweeting that it's just a bad flu. Our central bank is telling people that QE is unlikely. Literally 38 days later, they're saying we're going to do QE. Like, it's just complete trust and faith in our leaders is gone. And people, you see it in our comments. I'm sure you do too. People are so glad that we are giving them accurate and up-to-date information because they just can't get it anywhere else. And more people are going to go down the rabbit hole when they lose their job and they're sitting at home wondering what's going on.
That's it. By the way, for anyone who hasn't seen that interview that Alex did with Raul, that's gold. You got to go check it out. I'll leave a link to that down below in the description, so do go check that out. Of course, make sure to subscribe to Nuggets News if you guys aren't subscribed already. You've been doing some amazing work over there on your channel, mate, without a doubt. Now, one thing, the final topic for us for today, I want to talk a little bit about, we've talked a lot about Bitcoin, but what about Ethereum? What are your thoughts on Ethereum right now? We saw gas fees just go through the roof the other day during the height of the crisis, and it really, I think, kind of underlined that Ethereum at 15 to 17 transactions per second is struggling in times of high demand.
Yeah, I think that Bitcoin and Ethereum aren't competitors at all, and there's never been a more bullish case for a decentralized world than what we are seeing right now. People working from home remotely, blah, blah, blah. So that case is getting stronger. In terms of the scaling, we've seen a lot of breakthroughs lately. ZK rollups, optimistic rollups, Loop Ring have rolled out their decks the other day. They were tweeting about, hey guys, if you had been using us, this is how much lower gas fees would have been. Gods Unchained have solved the scaling problem with the number of transactions that they are doing. So all the solutions are there. It's just a matter of implementing them and rolling them out, and that's going to take a bit of time, and the switch to proof of stake. So I'm very, very excited. At the moment, we've probably seen a bit of a short-term failure in terms of DeFi and flash loans and a lot of learning lessons from what's going on there. But again, when I look at that from the outside looking in, these guys that are so tech smart, they don't have the finance side of things really. And they're like, oh, geez, we didn't have a lot of liquidity there. If that order book gets pushed down, someone can arbitrage that. We didn't think of that. So that's kind of this world where these teams need business-minded people, finance-minded people, because at the moment it's all the tech guys that are just building it out and they're going, oh, this works in theory. We didn't think about the game theory of this though.
That's a really, really good point. We're still so early right now with decentralized finance applications in particular. And if we look at some of the other things being built on Ethereum, they're a whole different value proposition when it comes to like collectible cards or something like that. But we actually look at these DeFi applications with the different exchanges and protocols. There's a lot of risk that remains right now because you hit the nail on the head. You have nerds making cool code and stuff that works, but then you have other people who have that more economic mind. They come in and say, I can game this and make lots and lots of money. We've seen it happen. We'll see it happen again.
Yeah, and I think Chainlink got integrated into the BZX to prevent that happening, and they were using Kyber as a price feed, and Kyber was saying, guys, we're a DEX, like we're not a price feed. So already that's a good instance of the community coming together and integrating different protocols, the Legos together, and they've already solved that problem, hopefully.
Yeah, absolutely. Awesome. Alex, thank you so much for coming on to have a chat with me today about everything that's going on in the markets. We could go on for hours. There's so much going on. It's absolutely crazy. And again, everyone out there, that link down below, check out the Raoul Pal video, and also make sure to subscribe to Nuggets News. Great channel with lots of great information. Alex, thank you so much.
Thanks so much for having me on, Lark. You're doing great work as well. I know we're both going to be very busy with everything happening, so we'll have to catch up again soon.
Absolutely. Thank you.
Cheers, guys.